Good afternoon. George Cavaligos for Naked Trader. An interesting day again. I think if you look at the charts that I've been sending out and you kept a copy of the 10-year either hourly or daily charts, you'll notice that the rising support trend line was tested again this morning for, I think, the sixth time over the last month and a half. Covering shorts against that level was a great idea. And if you're at all friendly to the market, getting long down there would have been a great idea too. But for some reason, and one of my customers pointed it out, he said that I keep avoiding buying that support level and trying the long side. Because I think one of these days it's going to break. And when it breaks, it's going to be vicious move to the downside in a fifth wave. I should wait for that. When it happens, there'll be plenty of time to jump on it. And should be able to be flexible and trade both ways here. Market bounced off that 119.28 low early in the day. The economic data was a lot weaker than expected this morning, even though it looks like a lot of it is being sort of poo-pooed away by the snowstorms that have hit the eastern half of this country. We caught a rally up on the economic data. I think the market traded all the way back up to 120.15.5 around 10 o'clock Chicago time. We put up a reversal, a bearish reversal hourly. Could have scalped that one really nicely. It traded all the way down to 120.03.5, which was kind of an important level. We noted yesterday. That was the first objective of yesterday's bearish reversal day. So if you follow the program, it's difficult to catch all these moves, but short from yesterday's close, covering against 03.5 this morning. You know, we got a little buy signal down there at 28, but by the time the signal was validated, the market had almost rallied all the way up to 120.15.5 based on the hourly candle there. It's tough sometimes with the economic data, but you don't have to catch every trade. You catch one here, you catch one there, and you try to keep your risk-reward ratio in balance here, where you're taking less risk and looking for more reward. Market traded up again this afternoon after the 7-year auction. Pretty good response again. The Fed is buying this stuff, and actually it's kind of funny because they auction off the 7-year today. Tomorrow the buyback is scheduled to be in the 7-year area. I don't think they'll buy back the issue that they just auctioned today, but they might. Who knows? This whole game has gotten silly, and it seems like with the real good response to the auctions the last couple days, that the QE2 purchases by the Fed has cleaned out a lot of the dealer inventory here. So the dealers oftentimes are scrambling, it seems, before these buybacks to stock up on the issues that the Fed's going to buy. I think that's why we rallied back this afternoon. Got all the way up to, 120.23 plus. This is getting monotonous, but again, tomorrow morning we'll have the buyback. The market's actually selling off a little bit right now. We're trading down around 120.16, 17. We're going to have some pretty good support at that 15 plus high from earlier this morning. As long as we don't overlap there, I think you can almost try to buy it, looking for a rally into the buyback tomorrow morning. We also have some pretty important economic data tomorrow morning too, so I'm kind of staying out of this one right now. I don't want to be caught long this market. We have the GDP number tomorrow morning. This is the first look at the fourth quarter GDP. I think that's going to be kind of an important number for us to see how the economic recovery is poking along here. If you're following the program and you have a small long on, keep your stop just below 15.5. Don't risk a lot here. I'm really keeping tight stops in this environment right now. On the upside, a retest of 120.23. Probably even go a little bit higher. I've got a short-term resistance trend line at 120.30 up there. Maybe we'll target that going into the buyback tomorrow morning and then look for the reversal. It's tough to get short on a Friday. If the market starts out typically one way on a Friday, you're not getting a lot of intraday reversals there. We've had a few that have worked nicely, and we'll keep an eye out for that tomorrow morning on the numbers and on the buyback. But we might just have a quick scalp buy into the tomorrow morning trade and maybe not even do a trade here tomorrow. But we'll see. A lot of bad weather in the East Coast. Supposedly people are getting dug out today, so tomorrow morning we'll have a shot for a trade and then probably be done pretty early. Have a great evening, guys. We'll see you tomorrow.